Good afternoon and welcome to the ticker on Yahoo Finance. I'm Seana Smith. Breaking news. We have the Dow on track for its worst day since December 2008 as investors grapple with the new concerns over the coronavirus. You can see the Dow now off 1,943 points. Now this coming as the S&P 500 is plunging sharply lower. The index even triggering a circuit breaker that halted all stock trading for 15 minutes earlier this morning. Meanwhile, the 10-year Treasury yield touching a new record low and is on pace for its largest one-day decline since August 2011. And we also have oil prices tanking today after OPEC Plus talks collapsed and Saudi Arabia cut its export prices. And you can see crude off over 21%. We have Brent also off over 21% today. Well, joining us now to make sense of all this, we have Jay Bryson, Wells Fargo acting chief economist. And Jay, when we take a look at the levels at what we're trading today, it has been quite a day nonetheless. Did you think we were going to be at these levels so quickly?
Well, I'm not sure necessarily about these levels, but I knew that given all the news over the weekend in terms of, coronavirus and then the decision by the Saudis to really ramp up production, I knew today was going to be, a pretty bad down day for many of these markets.
Jay, do you think that this will trigger a recession? Do you think the bull market will come to an end?
Well, in terms of recessions, I think you could potentially see a negative number here in the second quarter. We know that business travel is being slashed. We know that hotel expenses are going to go down. Spending at hotels are going to go down, things of that nature. I think it really depends on how things kind of play out from there. It really is going to depend on how this coronavirus evolves from here. 2 weeks from now, if this is the authorities have managed to get this under control, then I think, we're fine in the third quarter. But, if a month or so from now, if we're talking about tens of thousands of new cases, we're talking about quarantines here in this country, then that's a completely different answer there, and you very well could be looking at a recession. So I think that's the key here. It really depends on how this coronavirus spreads from here.
Jay, how do you think that this could impact jobs? Because we got that jobs report on Friday. It was actually a pretty strong number, but there's lots of talk just in terms of whether or not coronavirus will trigger a downward movement in that number this month.
Yeah, so we're going to have a bunch of cross currents here. I mean, we do know that, the energy sector is kind of getting crushed right now. You're going to see bankruptcies go up there. You're going to see some layoffs there. You'll probably see some layoffs in the airlines and the hotel space and things of that nature. On the other hand, however, we are going to see the census workers start to come in higher and higher as we go forward. And so I wouldn't expect negative numbers, on the overall print here in the next month or two. The real thing we want to keep an eye on, a real-time indicator, is the initial jobless claims. We get that every week. It's for the month, for the week preceding that. And so the number that we get this Thursday will show us what initial jobless claims were last week. And that's a real number we're going to have to really keep an eye on kind of as we go forward here.
Jay, I want to read a tweet from President Trump that he tweeted out earlier. Now, he was comparing the flu's impact to the coronavirus, and it reads in part, "Nothing is shut down. Life and the economy go on." When we're trying to figure out whether or not the Trump administration's response to the coronavirus, whether or not it has been, whether or not they have done enough, what they need to do next, what they should have done from an economic perspective, how do you read that?
Well, I think what we need to keep in mind here as we go forward here is there going to be any sort of fiscal policy response? The Fed is pretty much out of ammunition at this point, and if the economy were to start to turn down here, you really need to look at fiscal policy. And there's some creative things that you potentially could do there. There could be a potential payroll tax sort of holiday. You could give businesses, incent businesses for people who don't have sick leave, to give them sick leave so that they can stay home with their children and not have to come into work and infect more people. So it's really going to turn now to fiscal policy, not only the administration, but, Congress as well, to see what kind of what they can come up with.
Well, Jay, I want to ask you, though, if the Fed could do anything more. Do you think another rate cut, do you think that will do anything to curb some of the fears that are out there right now?
Well, what it does do is, so what you're seeing right now, you're seeing a big tightening going on in financial markets. I mean, obviously, the stock market is down, but what people don't really focus on is what's happening in the corporate bond markets. And we're seeing spreads really widen there. So for many corporations, the cost of borrowing, at least at the long end, is going up. What the Fed rate cuts do at this point is it lowers borrowing on their short-term revolvers. And so that's a help there. And then, if we go back to zero, then the Fed's going to have to think of creative ways, whether it's quantitative easing at this point, to try to stimulate the economy even more. The good news here is we've been through this before. We've went through this in the financial crisis. The Fed has a playbook. It's got a deeper toolkit than what it had going into the financial crisis, and so that's good news there.
Well, Jay, as you're talking here, we have stocks touching session lows off over 2,000 points in the Dow. Jay, I wanted to ask you, what do you think is there a risk? I don't know if risk is the right word, but what do you think the chances are that we get negative rates in this country, and what will that take for the Fed to do that?
Well, so I don't think, in terms of the short end, I don't think you're looking at the Fed cutting into negative territory like the European Central Bank or the Bank of Japan. Our financial system relies more on money market funds than what those systems do. And so when those rates go negative, those money market funds really start to shut down. Could you go negative at the long end of the curve, at the 10-year? I mean, yes, that's possible. I mean, we see that in some of these other major trading partners. I think in order to get there, you have to have fears that the economy is going into not only just a mild recession, but a deeper one as well. And so clearly we're going to have to keep an eye on that as we go forward. Just how bad the financial tightening that we're seeing right now and some of the uncertainty, what that means for the economy in general.
All right, Jay Bryson of Wells Fargo, thanks for joining me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.